Welcome to the RJLT Economics. Today, let's talk about the 0.25% rate hike by the Federal Reserve last week. Some people have expressed their surprise that the Federal Reserve still went ahead and raised the interest rate. I'm certainly not one of them. In fact, I said in a podcast right before that happened that I believe that the Federal Reserve will continue to raise the interest rate, even though at the same time it had some loosening policies of asset purchases. Right? Some people have already come out to say that this is quantitative easing, but as Jerome Powell said, that this is a bit different in that quantitative easing is a voluntary way to make the market more liquid, right? That's the quantitative easing. Whether it works or not, I think it does not really work, but that would be quantitative easing. What they are doing now, he says, is an emergency rescue. It's somewhat different. Even though the inflationary effects are the same, I guess I can agree that it is not necessarily quantitative easing, because now they are doing it by necessity, not out of their own volition. I mean, it is out of their own volition, but not on their initiative. It's a reaction. And what I want to say is, and I think what Jerome Powell wanted to express, the difference being that it's not a shift in policy, right? So their policy remains to lower the inflation, whether it is successful or not. And I think they're not going to be very successful, but that is the situation. Now, to understand this, I want to develop today's podcast in 3 steps. First, let's talk about what interests the Federal Reserve actually serves. Second, let's talk about what I think the effect of their actions and the banking crisis would be. Now, this part, the second part, if you have listened to me before, is not going to be that surprising. Perhaps I don't have any new idea in this part, but nevertheless, in case someone who haven't listened to me before come across this, I will repeat myself. And finally, I will talk about the European Union and the euro. So first, a very straight, direct answer, because I'm a little bit blunt person. Let's go straight and say what are the interests that the Federal Reserve serves. A Federal Reserve system is serving the interests of big private banks. There's the Wall Street, nothing more, nothing less. It is certainly by their statute not a government agency. It is the Federal Reserve chair and a lot of the officials are perhaps appointed by the government, the elected officials, but nevertheless, their mandate has nothing to do with the administration. And I think, I'm certain that the big banks and Wall Street still have great influence over the Federal Reserve System and over their policy. In the last decade and a half, the Federal Reserve carried out quantitative easing, the QE programs, indeed in concert with, or perhaps in sync with the policy of the US government. But that is simply because the government wanted to be fiscally irresponsible and it wanted the Federal Reserve to monetize the debt. And the banks also liked it, the big banks, the big Wall Street banks, because those are different. Those are not necessarily your average regional commercial banks who need savings and loans to make money. These are big investment banks. And a very low interest rate and lots of hot money really flooded the equity market, the bond market, and made it very profitable for them, right? So, and this was the period when they took a lot of assets from smaller banks and smaller financial institutions. They liked it, so that was not a contradiction. Right. So normally you say that when the interest rates are too low, it is bad for banks, but not necessarily for those big Wall Street banks. That's number one. And the number two is now they face a different situation because the inflation has finally reared its ugly head, and the global financial system is already wobbly. Now, it appears to me that it's important for these Wall Street banks to how to say it, to secure or to protect the source of their power, and that is the Federal Reserve and the US dollar. So they want to protect it, and they want to protect it by improving its credibility. And I think that the Federal Reserve has committed not necessarily exoterically, they are all ostensibly, I think it's exoterically, they have expressed their wish to control inflation. But I think they're not necessarily that much interested in controlling the inflation. They're interested in raising the interest rate. Now I have come around to this view, because whether there is going to be high inflation or not, it's not that important. The importance is that people continue to use the US dollar, that people still place trust in the US dollar, that the US dollar still plays an oversized role in global trade and the global financial system, so that people who control the dollar retain their control over the world. That's, I think, the interest behind Federal Reserve's policy. Number one. Number two, let's talk about what are they going to do. Knowing this, given this is of course my view, I think they will continue to raise rates. Perhaps, obviously, they don't want there to be too much system shock in the US, so they will make it perhaps slow. They will try to act sensible to the banking situation in the United States, but I think not so much in Europe. And so, and because for the reason that I will explain in the next section. So I think they will continue to raise rates to protect the credibility and trust in US dollar. This is one point that I made repeatedly in my previous podcasts. I think they're not so difficult to find. They're perhaps in the same playlist, I think probably called US dollar. So please have a look at that. Now, I think obviously I've also covered the other side of the picture, which is an initiative pushed by a lot of the competitors of the United States that want to promote a process called the dollarization. They want to win the world economy off US dollar. And well, it's good to have competition, and I think that the fact that that effort has been gaining momentum is a key reason why the Federal Reserve now needs to continue to raise rates to bolster the credibility of the dollar. They exoterically want to keep inflation down, even though they don't really care. I mean, as long as it does not go to hyperinflation territory, I don't think they care. A little bit of inflation is good for people who are rich and people who can print money. That's fantastic. But it's not necessarily so good for people who have to work, not so good for the middle class. But that's a different story. So this is the second part of today's podcast. And finally, let's talk about the euro. Because I mentioned that in the previous section, that I think the Federal Reserve will not be so sensible to what happens to the Eurozone, to the Euro banking crisis. They will care about the US banking situation, but I think not so much the European banking situation. And I think the European banks, a lot of them will fail. I wouldn't be surprised if by May, Deutsche Bank will be under, or will have already gone under, because Credit Suisse has always been, in the last 2 years, the number one most likely to fail, but number two is Deutsche Bank. And Deutsche Bank has a very unique combination of high leverage, high exposure to the situation in Ukraine and the situation in Switzerland, and also low trust, very bad reputation. So I think I certainly would not be surprised that Deutsche Bank is the next one to fail. And at that point, we could see, as I mentioned in my previous podcast, we could see that the European Union and the ECB will be willing to again break their rules and hell with the Basel III rules. That is for a third world country to learn, but it's not for us to practice. I think perhaps that's going to be what is happening. But the Federal Reserve is not going to care so much about what happens there. Why? First, I think there has been a misconception that a lot of people have said this. I think that perhaps is not true, that the European Union and the Euro are US, or some people even say the CIA or NSA creations. I think they're not. I think these are French creations. And the French created these institutions with hope to be a competitor to the United States. Now, of course, you can say that the European Commission and to some extent maybe the ECB have been hijacked by globalist interests who have also hijacked some of the institutions in the US. So in that sense, there is a connection between the two. But in today's situation, when the credibility of the position of the US dollar itself is at risk, if I were a guardian of the US dollar, if I were a guardian of US interest, I would not hesitate to sacrifice what I can, something that is external to me, in order to protect the core. I think the Eurozone could be very well that, right? Perhaps if I'm being generous, perhaps I want to protect Britain, because Britain is really a loyal ally. And maybe I want to protect Japan to an extent, because Japan the Japanese have their own system that it's fundamental, is very sound, even though its debt situation is quite bad. Perhaps I try to protect that. But Europe is a basket case. There are 27 or whatever the number it is, different countries. They have different motives. They have incessant infighting that makes it very difficult for me to work with. And now they make for, on the other hand, a very good, sacrificial limb, if we will. And so perhaps I will cut it. It's not that I necessarily want to sacrifice Europe for nothing, but I'm willing to sacrifice it for something that is very dear to me. So I think that perhaps is what is going to happen to Europe. I will not be surprised, as I repeated, I think since last year, or perhaps even before I started making this podcast, but certainly last year I said I put 3 years on the euro. So now I put 2 years on the euro. I think there are 2 more years to the euro as a currency as we know today. I think there will be a big economic turmoil in the eurozone, but at the other end of this turmoil, I expect that some countries can come out better off. I'm thinking perhaps the southern European countries. I think perhaps Italy, perhaps Spain, Portugal. Not so much France. I don't know. I'm a bit ambivalent, but I think the French have problems beyond that with the euro. They have a problem with the entire structure of their industry. Essentially, that the unions are so strong in France that they have not been able to evolve their industries. The old industries still remain old processes, old industries, old processes, old practices. They have such a strong position that they make change, they make evolution very difficult. So I think that is really impeding the development of France. I think that power still remains unless, as I said last year, unless the Fifth Republic collapses and there is a fundamental change in the French system. But that would come at its own cost, in the sense that I think at that point we're not talking about a retirement age of 64, 65, but that a lot of people will have to lose their pension or perhaps work till they die. I think that is a consequence of that. And I'm not so convinced that Germany having very similar situations to France, even though the unions had already been undermined by Angela Merkel. I don't know. I think Germany maybe has slightly better fundamentals than France, but at the same time, it also has been suffering the most during the Ukrainian conflict. So overall, that's my view. To recap, I'm not surprised that the Federal Reserve continue to raise their interest rate. I believe they will continue to do so, despite the financial situation, the financial crisis. And the reason is not so much as to keep inflation down, but to boost the, I think, is to protect the dollar, the interest of the dollar. And a side effect when it comes to Europe is that investment people who have invested their money in Europe pull their money out of Europe, and a lot of that goes to dollar-denominated assets, and a lot of it got flooded to the United States, and that rescues the U.S. financial system at the cost of the Europeans. All right, thank you very much for listening. Check out my website, drjlt.com. Have a great day.